Welcome to Wealthfinity. In this video, we'll be diving into the world of mutual funds and specifically, NAV mutual funds. If you're new to investing or just starting to explore your options, this video is perfect for you. We'll explain what NAV mutual funds are, how they work, and why they may be a great choice for your investment portfolio. So sit back, grab a notebook and a pen, and let's get started. Net asset value, NAV, is a term that is commonly used in the mutual fund industry. It is the value of an individual mutual fund share and is calculated by dividing the total assets of the fund by the number of shares outstanding. In other words, it is the per-share value of a mutual fund. One of the key benefits of investing in a mutual fund with a high NAV is that it generally indicates that the fund is performing well. This is because a high NAV means that the fund has a lot of assets and is generating a good return on those assets. Additionally, a high NAV can also indicate that the fund has a diverse portfolio of investments, which can provide investors with more stability and less risk. Another benefit of investing in mutual funds with high NAV is that they are often considered to be more liquid. This means that it is generally easier to buy and sell shares of these funds, as there is a greater demand for them. Additionally, high NAV funds are often managed by experienced professionals who have a good track record of managing money. However, it is important to note that a high NAV does not always guarantee a good return on investment. It is just an indicator of the fund's value and performance. Investors should also consider other factors such as the fund's expense ratio, past performance and the fund manager's track record before making a decision. Investing in mutual funds with high NAV can provide investors with the potential for higher returns, greater stability and liquidity, and professional management. As with any investment, it is important to do your research and consult with a financial advisor before making a decision. NAV, or net asset value. Mutual funds are a type of investment that are valued based on the total value of the assets in the fund divided by the number of outstanding shares. Some benefits of NAV mutual funds include professional management. NAV mutual funds are managed by professional fund managers who have the knowledge and expertise to make informed investment decisions. Diversification. NAV mutual funds allow investors to diversify their portfolios by investing in a variety of different assets, such as stocks, bonds, and real estate. Liquidity. NAV mutual funds can be bought and sold on a daily basis, providing investors with flexibility and ease of access to their funds. Low minimum investment. NAV mutual funds typically have low minimum investment requirements, making them accessible to a wide range of investors. Transparency. NAV mutual funds disclose their holdings and performance on a regular basis, providing investors with a clear picture of where their money is being invested. It's always important to understand the risks and fees before investing. It's important to consult a financial advisor before making any decision. Understanding how NAV mutual funds work. A NAV mutual fund is a type of mutual fund that calculates its value based on the net asset value of its underlying assets. The net asset value, NAV, is the total value of the fund's assets minus its liabilities, divided by the number of shares outstanding. NAV mutual funds are also known as open-ended funds, which means that they can issue and redeem shares at any time, based on the fund's NAV. When you invest in a NAV mutual fund, you are purchasing shares of the fund at the current NAV. The NAV is calculated at the end of every trading day, and the price per share is adjusted accordingly. For example, if the NAV of a fund is $100 and there are 10,000 shares outstanding, the price per share would be $10. If the NAV increases to $110 the next day, the price per share would increase to $11. NAV mutual funds are managed by a fund manager, who is responsible for buying and selling the underlying assets of the fund. The fund manager's goal is to generate returns for the fund's shareholders by investing in a diversified portfolio of assets that align with the fund's investment objective. The fund manager's investment strategy and the performance of the underlying assets will determine the fund's NAV and, ultimately, the returns for shareholders. One of the advantages of investing in NAV mutual funds is that they offer investors the opportunity to gain exposure to a diversified portfolio of assets with a relatively small investment. This is because NAV mutual funds pool the money of many investors and use it to purchase a variety of assets, such as stocks, bonds, and real estate. Additionally, NAV mutual funds are typically more liquid than other types of investments, as shares can be bought and sold on a daily basis at the current NAV. NAV mutual funds are a type of mutual fund that calculates its value based on the net asset value of its underlying assets. They offer investors the opportunity to gain exposure to a diversified portfolio of assets with a relatively small investment, and are typically more liquid than other types of investments. However, they are subject to market risk, and typically have higher expenses than other types of investments. If you are considering investing in a NAV mutual fund, it's important to carefully consider the fund's investment objective, the fund manager's investment strategy, and the fund's expenses before making a decision. In conclusion, mutual funds, particularly NAV mutual funds, are a great investment option for beginners looking to diversify their portfolio and gain exposure to a variety of different assets. NAV mutual funds are valued based on their net asset value, which is calculated by taking the total value of the fund's assets and subtracting the liabilities, and then dividing by the number of shares outstanding. They offer many benefits like professional management, diversification, and liquidity. It is important to do your research and choose a fund that aligns with your investment goals and risk tolerance. As always, it is important to consult a financial advisor before making any investment decisions.